Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, November 14th, 2018. In this video, I wanted to update a few of the trade ideas. I wanted to do that in video format. And as these are somewhat related, these are commodity trade ideas right now. I'm referring to the official trades. So we have USO, gold, platinum. Gold and platinum. The precious metals are also commodities as well. They can, consider that precious metal niche, but they also have industrial uses. And so I'll cover those and of course GDX as well. So that's as far as our exposure right now in our long trades. We're looking at things that are not correlated to the stock market, have nothing to do with the stock market, and that would be in this case oil, precious metals, miners, and the TLT, the bond ETF. So let's just start with oil here. USO, yesterday it was falling down to these levels, and I wanted to just go over a comment that I made under that post last night. And I would encourage, if you're following the site and you're signed up to get the email notifications on the front page, keep in mind that a lot of times there's some useful comments and additional charts and other commentary that I might make under those posts. So you want to come into the site from time to time if it's a topic you're interested in or a trade you're in, and check to see if there's been any updates made, because you won't get those, once the front page post is sent out, you get the email and that's it. And sometimes those posts will contain a chart image. Sometimes if it's a gallery format with a lot of charts tied together, those might not come through on the emails. I'm working with a developer on that to get that issue resolved so you can see all the chart images. So, all right, let's start at USO. So yesterday, I had a good question put to me on that under the comment section. Let's take a look at that real quick here. Let's go to that post. Here was yesterday's setup on USO. At the time, it was falling down here to that 1209 support level, where I could have saw a bounce being possible, and figured, okay, we'll go ahead and add it there as an aggressive entry. And I also made clear that an alternative option would be to wait till see if it hits this S2 level, which is even better support, or take a partial position there and scale down, and but not scaling below 1174. It was a pretty well-defined support level, and that's the reasoning. So let's go and take a look at this Q&A down here real quick. I think it might help some people. Swind Surfer, new to the website, and asked about I often talk about momentum fueled overshoot. And again, I wrote that in here. If there is a definition of momentum fueled overshoot, this is it. I mean, that is what we call when you have extreme downward velocity in a stock, and it works the same on the upside. It is not only very common, but it's actually more than usual. It's almost to be expected that you will overshoot a well-defined support or resistance level, even if that is the level that caps. In this case, it's a support level. So even if S2 is the level that caps this slide, it's more than common to see an overshoot. However, there's no guarantee that just because it overshoots it, that's only going to be an overshoot. In other words, it may have overshot S1 briefly and snapped back up. We only know in hindsight. But what you don't want to do is dig into a position, get down, continue to add to it and increase your losses. So what I like to do, if that's the support level, I think something should reverse that, and that's my, last case. That's it. I don't want to see it go below there, or I don't plan to add. I won't add below 1174. However, let's just take a look at how I replied to that comment. Number one, yes, absolutely. I said an emphatic yes. I would most certainly consider that a momentum fueled overshoot, referring again to that level. The question was, would it still make a good trade? Here we go. Would it still make a good trade idea if it overshot one of those two levels, 1174? He said to scale in no lower than 1174, but I'm not sure how rigid that number is. Well, you don't have to have it to the penny, but for the most part, let's just keep it simple. 170 support and it goes below it, it's not really a good idea to continue to add to it. However, if it comes back above there, especially on a brief overshoot, which is what it did here. So let's go on back into my answer or my reply here. So number one, yes, I want to say this, that crude oil had by just about all metrics what appeared to be a selling climax. You can check out this under the comments section. In a nutshell, tell you what a selling climax is. It's first of all, they don't just come on a little pullback. after a long uptrend or a sell-off or correction. It comes after a prolonged downtrend, after a correction, after a bear market, and the more vicious the sell-off, the better. And then what you look for is an unusually outsized candle. In this case, we're looking at a selling climax. So a big red candle. And I'll say this, sometimes by the end of the day, that candle can go green if it has a huge wick. Sometimes you have a big hammer but you want to see an unusually large candle, bigger than the rest. And most importantly, you also want to see a noticeable large spike in volume as well. That is what we call a selling climax. And it works opposite and reverse with a buying climax at the highs. So you had that, and that's a checkbox right now for the long, I think. It does not guarantee that this trade will continue to play out. So far, so good. We have a little pop in crude today, but I'm still looking for more if that was at least a near-term selling climax. It doesn't have to be the end of the correction of crude, but when I say near term, maybe it's good for a bounce that can last a few days to a few weeks or more, and it could possibly mark the bottom. And we hit some pretty significant support on USO. But after a big sell-off like that, usually you'll come and back test that level again, even if we get a decent bounce here first. So I'm looking right now for just that oversold bounce off support, and we'll see where it goes. Maybe then we'll let this trade morph into something else, or maybe we'll just take our money and run if we hit those targets soon. That's a big if. Next thing up, due to what can only be described as an extremely strong downward velocity in USO, um, that an overshoot of the 1166 level wasn't only acceptable, but it's almost guaranteed. Okay, I already talked about that. I said it's highly likely. And then when I posted the setup, we were just coming up on that 1214 support level. But we weren't coming at that point in time. Let's go back to that chart. There it was yesterday. You can see the candlestick wasn't anything unusually outsized. By the way, all the charts on the right side of the chart, if you click on them, they'll expand. And then if you have a scroll wheel on your mouse, you can zoom, you can click and hold and pan, move around. So if you really want to get some detail, zoom in, pan over to what you want to see. And you can see that candlestick there. I've obviously zoomed in quite a bit, so it's a little bit blurry. But you can see it's actually smaller than that previous candle there. It's in line with this candle here. So that's not really an outsized candlestick. There's even a larger candle, red candle there. And when you want that to go away, just click on it, it'll go back away. All right, so that is something to note now. However, by the time we got going there, here you can see after we took out 1214, we just kept going. That is what I look for. This looks very much like a potential selling climax candle. Only in hindsight, we can look back a week, 2, 3 weeks from now and say if that was a selling climax, we want to see USO remain above it at this point in time. So far, it came and, it overshot that level right there and closed at 1169. So perfect. We had a brief little overshoot and snapped right back above it, which shows that it's respected that support level. It showed that 1166 actually did end up turning out to be support because we closed a hair above it. All right, back to that, and a couple more points to make here. Let's see, where was I? Right here. Go down to the comment section where we were. All right, and let's see. So we had that overshoot on one of the biggest one-day drops in years, and so that adds to the chance that we would overshoot it. And then the asterisk here. What I said is about adding below or above or below that level. So we zoom in now to a 1-minute chart. Click on that again, and it'll expand, fill the page here. There's a 1-minute view as we overshot 1166. You can see it right there. So we came here, and we didn't just overshoot it and keep moving through like this. See these candles here? They're kind of gradual. What we did, these are little gradual candles. We came down with a big, one of the biggest red candles of the day, at least in the latter half of the session. And that was after a successful defense here. So all I'm getting at here, and this is me drilling down into the 1-minute charts and taking a really deep look at what happened. So you can see 166 was a level. We came down, we overshot it. Buyers did step in there. They ramped it up. It went down again. They took it out. So the first wave of buyers that stepped in there probably had their stops cleared. And you can see a big sell-off, a big 1-minute candle. So we dipped below there for just about a minute, and we snapped back above there. That's a 1-minute candle. We closed down there and then came right back up there. I think this candle here, the second 1-minute candlestick, closed back on it. And then look, we regained the level, and you can see this is what we call a very short-term selling climax. A huge red candle after a prolonged downtrend, also on a noticeable increase in volume, at least 1.5 times or better. And so we started moving up. They tried to come in here and sell it hard, big volume surge, but the sellers were absorbed. So all in all, again, this is now drilling down to the 1-minute chart. A lot of check marks there, at least yesterday so far for USO. So far, so good. And and so the point again was, if you were trading yesterday and you got that post late or you were holding off, you could have bought here. And now when it dropped below, do you want to stop out right away? No, you just entered. You're hardly underwater. And you respect the stops, whatever stops you used. I laid out some suggested stops on the trade, as I always do. But if you're planning to scale back in, once you saw that level regained, that's a good sign. Support broken, it was regained, and that helps. It's actually a very good sign because it helps wash out. Like I said, it shakes out a lot last of the weak hands, the longs, maybe sucks in some more shorts that now shorted the break of 1166 and they have to cover. So this was nice to see yesterday, and I just wanted to point that out that oops. That again, that's what I mean by not adding below that level. But if you come back above there, relatively quick with a momentum field overshoot, it's okay. So we'll see where we go today. Nothing huge so far. We're up 2.31, but again, you can see technicals are playing out. These are the trade parameters on this official trade, and so there were your two entry points, or scaling anywhere from S1 down to S2, and so far. If you split the difference, took a half lot there, a half lot there, you should be positive on this trade. Not by a lot, but we're a little bit above the midpoint there. And when you zoom in, you can see what happened. We bounced today. We had a strong rally up this morning in crude, overshot that 1209. Remember, support once broken becomes resistance. So technically, I could call that, it was S1 before, now it's R1, resistance 1. First resistance level overhead, where this next target level where it's set would be R2, or the next resistance level. So we'll just have to see how this plays out. And again, I'm not even going to bother doing too much on this right now as far as updating it. So far, so good. And we'll just leave the stops there. Remember, the stops that I provide are suggested stops based on, entries at certain levels, based on those swinging to the final target. But if you have a better or higher or lower cost basis, or you're targeting something different, by all means, use your own stops. These are just suggestions, typically using a 3-to-1 risk reward ratio. And that means based on from where the entry price is to if the final target's hit, allowing 3 units of profit for every 1 unit of loss. Again, give or take, rough rule. Okay, now let's look at gold. We'll run through these a little faster. I probably spent more time than I needed to, but again, these are things that I think are worth mentioning and passing along and trading, things I've learned over the years. And again, momentum fueled overshoot, you're not going to find it anywhere in the dictionary. It's a term I've made up years ago, just something I've witnessed, and it's something I factor into my trades. Therefore, it somehow, sometimes will help me avoid getting stopped out on those momentum fueled overshoots, or even taking an entry when it happens and getting a better entry price, or very least expecting that, looking to when those might happen. Like on gold here, for example, gold was in a pretty strong sell-off here, and this is when you get them down here at the end, and that was a momentum fueled overshoot right there, the 1205 support level. We were coming down. It was a support level that I had listed on this chart, and we overshot it briefly and snapped back above. And since then, once trading, the prices volatility stabilized a little bit, then you can see we caught support right on 1205. So let's just update gold. It's an official trade ID on the site. I'll go over pros and cons. More pros so far. I still like the trade. There hasn't been a lot to update recently. You had a pretty big rally, ran into resistance here at 117.25 on GLD. You can see it's a pretty well-defined resistance level. At the same time, GDX hit my second target. At that point, I did expect a reaction. If you recall and you look at the notes on the trade, I'll show you how to reference that in a second. I wasn't expecting much of a reaction at T1. You don't always get a reaction, and gold GDX blasted through there. On T2 it hit, but again, we'll get to GDX in a second. So that's it. We had a nice run into resistance, got a little stretched and pulled back. Now what I like so far is this PPO, which is can be used in many ways, but one of those is a trend indicator when the 9 EMA which is the signal line, is above zero, as it was here. It doesn't work so well in choppy markets, but for the most part, it'll define the trend. The trend is bullish when the white line is above the signal line, bearish when it's below, and you can look at just look above and see what happened where prices were trending. And so recently we went above. And now what will happen is often it will backtest that white line, the zero line, the dotted line in the middle will act as support or resistance. So in this case, if you go back in time, in some securities it works even much better on. You'll see that that level acts when it's tested from below will often act as resistance. We'll see the rejection there. Again, the white line, because the white line is the last of the two to cross a 9 EMA, and you get less whipsaw signals. So here was a bullish trend. The 9 EMA back tested successfully. The zero line kept you in the trade long from here to here, and then it gave you a little whipsaw. Again, it's not the best example to use it. Sometimes it works better. Gold has been largely in a big giant sideways to slightly higher trading range for the last couple of years now. But again, I think you can get the point. You can see where these bullish and bearish crossovers. Here was a bearish trend, pretty well defined by that. Told you at this point the trend in gold was bearish, and that's why we weren't in gold at that point in time, one of the reasons. But again, we crossed over bullish, and hopefully we'll get a successful test here. We certainly held this support zone. There was a gap. Those two lines represent reaction there in the bottom of a gap. And big green candle today, but right back to resistance, 115. In fact, that's where it stopped cold so far, right about there. Yeah, high of 113.50, 113. No, I'm sorry, 115.06. Yeah, and the resistance is at 115. So that's where we stopped. And here's the official trade parameters right here. I can't recall. We can look at the notes in a second where we entered this, but there it is. We bought it somewhere in here. This is a stop, maybe over here on a breakout above this consolidation range. Yeah, I think that was it that day right there. And went on, hit our first target. It pulled back, and you can see big gap support right here. And I'm going to get to something else in a second here that really helps to explain why gold had such a pop today. It was not due to movement in the US dollar. So right now, this trade is playing out well. I'm sure would have liked to see it just continue right up and hit T2 and T3. We don't always get what we want. So like I always say, if you're going to take a trade, have a trading plan, go into the trading plan that says what you're going to buy, why you're buying it, where you're going to buy it, and where you're going to sell it if you're correct or if your profit targets are hit, and just as, if not more importantly, where you're going to stop out if wrong. So the trading plan is still intact, and I haven't seen any reason, despite the frustrating sideways grind recently, there hasn't been any reason to pull this trade in early. Sometimes I will do that with an official trade. If something compelling has changed in the charts, I will close that trade out early, and that's not the case with gold. So like I said, we went up, we hit our first target, we had a pullback, and hopefully we go on and hit our second target and eventually our third. And if something is really bullish in the outlook, I may extend, add some additional targets. Otherwise, I may close a trade here, or maybe even close it if we get there, depending again on what I see. But as of now, so far so good there on that time frame. And again, that's a daily time frame. Okay, now what, at least in my opinion, caused a big pop in gold today? It was a back test of, you guys heard me referring to in recent weeks or in the last month or so, when we had that initial leg down in the markets. I was talking about the golden trend lines on SPY, ES, NQ, and QQQ. On the 15 to 60 minute charts, I had downtrend lines that were just acting so well as resistance. And this would be, if you followed this, my analysis for a while, for many months I was harping on this. So I didn't call it the golden trend line, but we'll call it that now on gold. And yeah, and that's very fitting, of course, because we're trading gold here. So let's make it gold. There we go, something close to gold. All right. So what I had said many times over is we needed to see gold take out two numbers. It had to take out that downtrend line right there. And again, downtrend lines are dynamic because they come in at different prices over time, and the 1213 level. So I had those two lines colored green. This is where we went long gold, right here once it took out that golden downtrend line, which had acted so well as resistance, capping a lot of advances for a while. Gold was building energy, and again, the 1213 level was even, as if not more significant. A lot of reactions capped there. So this was our buy trigger on gold, and that you can see we went on from there. It was a legitimate breakout. It was on high volume, impulsive, meaning a big move up in one day. Everything you want to see, and we hit our first target, which I just showed you on GLD, and pulled back. We came back in, and I mentioned, I believe at the time, came back in, hit 1213 to the button, and then boom, right back about to where we were before. So there was another buying up. This time around, we dipped below 1213, and it was and is a little concerning. But as of now, what we did is we simply came back in. We hadn't back tested the trend line, so clear all these annotations out, and that's what happened. And we broke out, had that rally, came back in, and now made a successful back test of this trend line, which worked so well as resistance in the past, was further validated with the breakout. Validated because it was an impulsive breakout and gold ran from there. So that helped to validate that as a well-watched important technical level. And today the buyers, those watching that trend line, stepped in and bought it off that trend line. It hit that trend line. And there's also one I just added here, a little minor uptrend line off the low. So we have intersecting trend lines. And I also have you can see a price support level right here. Where is that at? We zoom in a little bit, 1196 or so. Yeah, right about where we stopped today. So there's, you can see pretty nice support level there in the past that had acted as support on several instances, or resistance. And so basically, to make it very simple, gold pulled back to a confluence of support, three different support levels: price support and two trend lines, an uptrend line and a downtrend line. And so far now we're really close. Actually might be a hair under it. Are we under that now? We popped, yeah, we fell back below it. I'd much prefer to see gold stay above 1213 to help the case that this will not just prove to be a fleeting reaction. That is still a possibility. Let me say that now, and I'm not happy as I'm doing this video to see it back under that level. It's at 1210.80 right now. And again, as if I didn't make it clear, these are gold futures, GC. So the trend line was successful, but sometimes you get a reaction, just like you had a reaction here on this back test of 1213, but it didn't stick. We had a reaction here. Now, where I'm going to go with this is there's still the possibility, and I've laid this out before. Okay, sorry, I had a brief interruption there. But so, all right, let's watch this level. Let's see what happens. Hopefully we can regain 1213. If not, if we come much below, especially today's reaction lows, that's not going to be good. Let's just say it there. Yeah, these recent reaction lows right here. So we'll call it around the 1196 level, give or take, because that'll take us down below the trend line. Remember, we can come back in for another test of this trend line, but the problem with downtrend lines back testing is they come in at lower and lower levels each day because you have a negative slope. They're downward sloping. So we'll see what happens. That would be the ideal scenario. So as of now, no reason to change anything or modify that trade. But if that does give way, then we're going to go to that my alternative scenario, which again, I called it, I think, the most bearish of my bullish scenarios here on gold. And that was, and still is, I can still see the possibility. Here's the official trade of something like this, where gold comes in, we come back down, we undercut these lows. That's a well-watched level. And right around here, I didn't mean to cover, meant to grab that with this box here. So a lot of reactions there. So this was a scenario I laid out before, and I'm still open to this possibility. It's not my preferred scenario, but it's certainly one that could happen here. And that would be washing out, a little washout move. We come down, take out these recent lows. That would certainly, it would blow a lot of longs out. It would run some stops. I have to imagine there's a lot of stops placed below there. We'll probably get taken out too, unless I decide to modify the stops or even pull the plug on the trade earlier, which I might do. Because if we come down to that level, we'll probably undercut it. We could come in and test it. Sometimes you successfully test it again. But I'd actually like to see it for the longer term case. I'd like to see that move like that. And what it would do simply put, and this is what I've laid out before, is give us divergent low. We have plenty of room on these indicators. The PPO and the RSI are making higher highs here. They could take another leg down, and as long as they remain and reverse below these previous reaction lows, that would give us bullish divergence. So it would look something like that. There'd be a nice divergent low and set the stage for a more lasting rally in gold. You don't have to have divergent lows at the lows, but I like to see it, especially on the daily time frame, if I'm going to position for a longer term trade. And on a related note, platinum is also an official long trade. This one, can't remember where our exact entry price was, but it already hit the first target pretty quick, 80.22, and this was cruel to us. I had a second target here at 83.40, and we hit a high of 83.11, is it? Yeah. Yeah, so we came pretty darn close, but reversed just shy so far. Again, not enough in the charts right now to pull this trade early, but as I always say, do what you're most comfortable with. There is a trend line there, minor. It's not super well defined. Platinum's taken that out, has taken that out now. You still have some support down here. I forget where the stop is. You'll have to reference the notes. Again, to do that, if you're new to the site or if you've been using the site for a while, as far as pulling notes on trades or anything, just come up here to the top menu here, trade ideas, hover there, go to active trade longs. That's where gold, platinum, those are long trade ideas. And so if you want to get the notes, you go here on GLD, for example. If you click that ticker tag, which I just did, see how they change colors. That means it's linkable. It will then pull up all analysis on gold related to this specific trade. And now see, if you go down below a post and you see these tags down here and you click on GLD here, it will load every post that I've ever made on the front page that had analysis on gold. And you'll get hundreds of, easily hundreds of posts there on gold over the years, if not more than that. So there's the gold swing trade update. First price target was hit. There's a trend trade. You'll always have the trade parameters in the original post. So if I click this title, it'll bring up the entry. There's gold when we entered. Showed it going up to the first target, having a reaction. That's why the arrow breaks. And go to second target, a reaction, then third target, the reaction. There's the, again, that's the breakout right there that I showed you earlier on GC gold futures. The breakout that we had back then on that date when we entered, and all the charts always time stamped and date stamped on the bottom. So that was October 11th. And last but not least is GDX, gold miner ETF. Miners will ultimately follow the metals. Sometimes you have temporary disconnects where the metals outperform, but usually the miners will go in the direction that gold does, except they'll go up more in percentage terms, or if gold's in a downtrend or pulling back, they tend to drop more than gold. So consider it, one way to look at it is a leveraged play on gold if you're trading GDX. And I've said this many times. Sometimes I will use leverage ETFs or ETNs as the ETFs or ETNs are very similar as the official trade proxy. But two of the worst culprits for the decay that I talk about when you use leverage are NUGT, Nugget, and Dust, DUST. Those are the 3-time leverage gold mining ETFs. If you get them at the right time, when there's a strong uptrend in gold, like you did back here a couple of years back when we had this breakout, this is when you want to be long Nugget. And I've showed you these examples before. Nugget vastly outperformed GDX. And I'm not talking 3 times or 300%. It went up 3 or 4 times what 4 or 5 or more times what GDX did, because when you have these unidirectional trends, the math works for you, the 3-time leverage. Where you want to avoid them is during choppy sideways periods. So if you've been in Nugget for the last few months, you're certainly doing worse than 3 times what GDX has gained or lost, depends where you entered it. So just be aware of that. And when it broke out here, we went up, we hit the first target, we blew through it, but it's a second target where consolidation was expected. So we hit our second target pretty quick right there. We pushed back up, hit the top of that target zone, put in a divergent high. We had negative divergence, and since then it corrected just like gold did. And gold, of course, also hit resistance. So where are we at now on GDX? I guess that's all. Yeah, in other words, where are we going now? So we've pulled back to support, just like gold pulled back to support these lines here, and they were on the chart, I believe, at the time. There's a lot of gaps, a lot of reactions. There's a support zone, and it's not super well defined because GDX is a volatile little sucker. These miners move up and down a lot. But as of now, we're looking at a thrust up, divergent high, worked off some of those overbought conditions, and we've pulled back to support. So just like you want to see gold hold the recent lows I just showed you on, especially on GC gold futures as well as GLD if you're not tracking futures, um, you want to see GDX hold these recent lows. It was a pullback to support. It was pretty well defined. There's not a lot of support left once we take that out. We traded briefly down below there, but you can see this is where most of the trades have occurred on or above this support zone. So there's my analysis on the miners and the metals. There's a little downtrend line. If GDX can pop up above here, if gold can take out today's highs, which would be nice, it would get it back above that 12-13 level on GC. We could see it run and head on up here. I probably should cover the euro, but this video is getting a little bit long, so I'll just touch on it briefly. This helps. When you see the euro US dollar, euro is gaining against the dollar. It means the dollar is falling. This is a 60-minute chart. Daily chart, we have nice bullish divergence. I didn't want to see it get below 1/3. Well, heck, I didn't want to see it go below this level right here. This was a key support level. It had a little fake down move there, regained it, fell back below again. So I haven't been very, fond of the price action. But let me say this. The dollar, and this means the dollar has been strong. This is again when the euro is falling, the euro US dollar pair, it means the dollar is going up against the euro. So the dollar has been stronger than I anticipated for the gold trade. However, gold has held up extremely well considering that's a bullish sign. If we continue to see dollar strength, it will ultimately weigh on gold. But if we can get a reversal and a pullback in the dollar, since gold held up so well during the recent dollar strength, what that tells me is it had a flight to safety bid, as it normally does. When the stock market's volatile, people usually flock into treasury bonds, but treasury bonds haven't been doing it for them lately, and they go into gold. So the fact that even though gold hasn't gone anywhere in the past few weeks, relatively speaking, it even dropped some. It didn't go down as much as it might normally with the dollar strength. So I think we can get a nice boost if we can get a reversal here, if these divergences can play out. We had a divergent low right there, positive divergence, and it did lead to a rally. And if we can get one more of those, and remember, this divergence is simply an extension of the previous divergences. So it's a much more powerful, larger divergent low, which all other things being equal, that can indicate more than a pop like this. It can indicate a much larger move in the euro. That would be uber bullish for gold if that plays out. So let's watch that. First things first, see that 113.056 level. That was your previous reaction low. We tested it there again, broke below it briefly, and now we've recovered it. So that is a bear trap right there. Bear trap for the euro US dollar traders. They would have shorted that level, had stops cleared. If it can regain it with conviction, we should pop back up. That should be a pretty good thing there. And again, that would help the case of gold. If not, if these divergences don't play out, if the euro continues to sink against the dollar, it will give gold some more headwinds, and we may go into that alternative scenario. Gold undercuts the recent lows, and we'll probably stop out before then and just look to recycle back in if things look good at the time. But as of now, I'm sticking with this trade, and that's my preferred scenario, is that we continue to move up from here in the euro, meaning dollar down, meaning gold up. All right, another long video. Apologize for that. I'll try to keep them a little shorter, but I wanted to pack a lot of stuff up. I probably should have broke it down into one on oil and a separate one on the precious metals. But we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.